Yo, I know it's been a while. Um, some things have changed since my last video, and partly that's reason for um, the s- the time span in between. So I don't know if you remember last video. It was a recap of I think it was that day's trades, and I think it was like a couple days afterwards to where just amounted to a couple more losers that essentially I just felt needed to be improved. The strategy did. So I guess this is going to be sort of a in-depth look of uh, of some a back test that I did that was for that strategy that I no longer use. Um, Not all these numbers really, particularly mean anything, but we can go into it and I could show you a little bit if you want. If you guys would like to hear, whoever listens to these, I don't even know. If you guys would like to hear um, how I do back tests and how they could be beneficial to you and your trading, and basically give you more confidence in your setup just by seeing the numbers on an Excel sheet or seeing the numbers in actual, you identify your risk, you identify the possibility of profit, and then you do it over a course of 2 months, 3 months, whatever how much ever you want, and you just see, the amount of profit you could make versus the amount of losses you can occur. So here's here's the back test. Essentially, basically what it was I could just give you an in-depth of what it actually was. Let's see today. So essentially, what I was tracking was, so you have the pre-market high on a gapper, and then whatever the low was after the pre-market high occurred. So 50% retracement between the two would be an entry point. So 267, as you can see right there, would be a 50% retracement. And then you could go even further and say, maybe that back test wasn't that good. Then you could go in with another, and you could do, it would be basically 75% retrace from the low, but you just do the 50% between the two. So 285 could be another entry point. And basically, it doesn't have to be exactly at the number that I didn't make. I did I think a percent or two below it, so I had a range that I could enter into. Um, so essentially, that back test amounted to 71 trades I entered, 32 trades I stopped out on. A profitable trades was 38, so the win probability of the win percentage would have been 53%. The win-loss ratio was 1.18 to 1. The profit was using 200 shares at a time. The profit would have been around 9 grand with the losses of 2 grand. And that was over the course of 3 months, I think. So October 2019 to just midway through December is whenever I stopped. And essentially, the reason I stopped was, I think it was 2 weeks afterwards or so. I just started noticing the sentiment of the market changing, where there was more often than not, I would have been stopped out on the majority of the trades, and I just didn't feel like 53% was a substantial amount of win, you know, profit loss ratio, win loss ratio, whatever. Like my risk was always over pre-market highs, right? So, the risk to reward wasn't overly great for having this win probability. Obviously, right? You have that. So, I mean, that's nothing to scoff at. It's just, I felt like there was a better probability out there. And I don't know if you've heard of this website called Equity Curve Simulator. So essentially what you do in here is you do a starting equity, you put your win probability, and your win probability is essentially just your entered trades, or your profitable trades divided by your entered trades. Your win-loss reduction is the profitable trades divided by the stopped out trades, and the losses, whatever. Number of trades is 100, and you can do whatever you want. That just means out of 100 trades, what's the average going to be? And 20 lines is just 20 iterations. Risk per trade is how much of this equity, starting equity, do you want to risk on the trade? And you can set it to whatever. So, fucking divided by 25. So you're essentially risking 500 a trade. So you do that, and obviously it's going to change because not every simulation is going to be the same. But yes, it was a slow and steady climb, but you also had some that's just stayed around. You had some that increased a little bit, and I just felt that it was not as highly profitable as I could have had. And it was more of a set it and forget it type situation or type strategy, in which those can be good, except, sometimes there's situations where you could have a better chance of being consistent if you were in tune with the market, not just set it forget it type robot. With that said, over the course of since December to April 2020, so 5 months or so. I've done multiple ones here, and this is like the best iteration for this specific strategy. My other one that I came up with, I have a couple other ones, but this one is pretty good. This is one I use. So over 5 months, I think I have this risk anywhere from 3 to 2, or not, it's like from 2 to 400 or so, depending. So here you have the win-loss. We could put it in this equity curve simulator, and you can see. I'm gonna, obviously, I'm not gonna share, the information about this, because my information, sharing it for you, essentially, nobody's all the same, right? So what works for me isn't gonna work for you, and yada yada. Essentially, you just have to find what works for you, whether you want to be a long or a short or what have you. Gather data, compile the data, and just come up with an idea of what you want. Essentially what you want to trade, how you want to trade it, and see if you could find an edge based on backtesting. And obviously you don't have to backtest. You can just go in and do whatever you want. You don't have to backtest. Not everybody backtest, but I feel like it's a pretty decent idea to backtest, just so you have the confidence in your strategy. So here we have a 69.3% win probability. Win-loss ratio is 2.26. Number of trades is 100. We'll risk 1. So as you can see, obviously way better. And, it's been a rough, for this strategy, the end of April, beginning of May, actually, I'd say most of April, beginning of May was pretty is turning out pretty rough. There's a lot of stocks nowadays or recently that aren't really respecting pre-market highs, and my strategy is not directly correlated with the pre-market high. It's one of the predominant um, risk levels. So yeah, basically what I was gonna essentially get out, bring to light, and show you guys was if if you want to hear more on backtesting, how you do it or how I do it, I could set up, go through a whole backtest based on okay, based on just random data and see what we could come up with, whatnot. But I feel like most of it's relatively explanatory on itself. With that being said, if you want, let me know in the comments. If not, then that's fine too. I just figure I'm out to try to be beneficial. If it helps somebody, helps somebody. If not, it doesn't. I feel like I'm gonna get. Well, I've said this before. I feel like I'm gonna start getting back into making some videos. And it's not gonna be sell me on this bullshit. It's gonna be just mostly for my benefit. And then if you found use in it, then you can watch it, whatever. But I do notice that I was going through my my channel, and I noticed that I've had an influx of people or an influx of views on, like, I think the Momo scanner that I had made. I take that two ways. One way is you have a lot of people that are getting into day trading, and that's fine and dandy, except I feel like a lot of them are doing it for the wrong reasons, and they're following the wrong or the incorrect people. So I just feel like I just get on here, show my trades, just ex- explain my thought process and how I've been doing this since 2016 or so, and how I've just evolved over, and I can give some little hints and tips on what to avoid, what I have done, and what I regret. Not necessarily regret, but what I've done. What would I have done? What would I have done differently? Who I would have avoided? Yada yada, such and such. All right, I'll catch you on the next one. Let me know if you find interest in that. If not, then that's cool. Peace out.